Incredibly important that we have a constructive pricing backdrop. We've had an incredibly robust issuance backdrop this year, but with very binary outcomes. Deals that are up 30%, countered with deals that are down 30%. And so I think to keep this window open through the spring and summer pricing season, some constructive outcomes are sort of must have.
That binary outcome, is it just because some are really smart deals and priced well, some weren't priced well? Like is there anything that you can say as to why you've seen those two different pathways?
So many of the outcomes are deal specific. I think what has been instructive and what will be interesting to watch in this next cohort of deals is obviously aftermarket support for each of these transactions. We have a number of transactions that are for, as you mentioned, sort of multi-billion-dollar assets that are coming to market, a lot of them private equity backed. There will be more to come in terms of supply on a lot of these transactions. And I think what's been very encouraging on top of the resilience of the market, given the volatility that we're seeing, is the resilience of risk appetite from the buy side, which again, as we look for green shoots to keep this window open longer, those are all sort of very positive barometers for us as equity capital markets professionals.
Well, take us behind the scenes. We're living in a market that moves on every headline and every potential attack or conversations around a ceasefire. With DC and Iran at the front of everyone's mind going into earnings season, what are the conversations like among your banking peers when you're talking to a management team about, okay, now is the time for us to look to make a deal?
Yeah, look, sometimes you don't know that the IPO window is open until you look down and it's definitively closed. And so for the folks who have done diligent preparation, they've tested the waters, they've engaged with institutional investors as part of their IPO prep, these valuations are generally quite well underwritten by the buy side prior to launch. You see a number of transactions that are coming to market this week that have cornerstone institutional investors or sponsors who are already sopping up some of that liquidity that will come to market.
Making sure it goes well.
Exactly. And so these deals are structured to be successful at the outset.
Go.
Well, no, I was just going to ask.
This is your world.
But we've been talking, right? So industrials, aerospace and defense, healthcare, are they active because of the calendar? Or are they active because investors are saying to you and your colleagues and your peers across the street, hey, we want more of these types of companies?
Yeah, not to get asset specific, but certainly some of the subsectors that you talked about are very much of the moment. Defense tech, space tech, other parts of the market that are obviously becoming very quickly sort of part of the zeitgeist. Which you guys are covering quite well. Well done. Those are obviously very of the moment. Outside of that, again, you mentioned industrials. Multi-billion-dollar EBITDA companies that have been around for decades. I think these are assets where institutional investors feel very, very comfortable. Again, there's a lot of capital rotation that's going on. The set it and forget it software market of the last 10 years, a lot of that capital has been freed up and is looking to be redeployed into these new stories, new IPO entrants that are coming to market.
When you talk about, Michael, we're talking with Michael Ventura over at RBC Capital, and is it companies that have been private equity owned for a long time, so they've got a nice duration in terms of the business. You can look at a bunch of the balance sheets over a period of time. That's what you're talking about. They're finally coming to market.
Exactly. Durability through cycles. These are investments that our private equity clients that have held them probably a little bit longer than the normal private equity cycle, scaled them a little more significantly than normal, and are looking out at a market backdrop where valuations are frankly exceeding expectations. So it's a perfect time, volatility aside, to be entering the market again.
Well, you mentioned you don't really know an IPO window is open until it's closed. I feel like talking to some of your peers over the last few weeks, the sense was almost, if you talk to issuers who are on file, we wish we went a few weeks ago. Is that kind of your read of where we're at?
Timing this market, we've talked about this before, timing this market is as much a function of luck as anything else. Luck favors the prepared. And so again, it's that underwriting of valuation that you're doing in the private market in your final stages of IPO prep that I think will really separate winners and losers in this next open window.
So something like SpaceX, I mean, is it just a whole other category you throw that into, and that's the anomaly?
Whole other category. Obviously can't comment on any specific transactions that may or may not be preparing for market. But I think thematically you will see a number of very significant sort of seminal capital markets events potentially over the next number of months. And those will sit in a category by themselves.
When you mentioned defense though, and you like opportunistic, I mean, does that mean that it's not a good company going forward? That if they're looking at the market saying with the war on and so on and so forth, the defense spending that's going on, not only in the U.S., but also overseas, it's a good time. Does that mean they're just being opportunistic and it's not necessarily a longer term good play, or no?
No, I think, look, I don't think you can ever fault a private company for sort of timing the market when the subsector in which they operate is as front and center in the day-to-day news flow as some of these assets that are coming to market right now are. I certainly don't think that's a barometer or a telltale sign of future market performance.
Because when things are hot and you take advantage of a certain situation, you get sometimes some things that shouldn't go public.
Well, we see that play out with some of the themes. I think back even to last summer with some of the crypto deals that we saw getting done, and obviously the aftermarket performance has been pretty lackluster. But Michael, I just want to come back to kind of the point you made about aftermarket performance. Half of the 10 largest deals this year, a lot of numbers, down more than 25%. When we look at a horizon that has two notable deals this week in Madison Air and Arc6, I know you can't talk specifics, but how important is it that the deals that get executed and priced this week and next week that kicked off earlier today, that they perform well ahead of what is going to be presumably a pretty busy stretch?
It's table stakes. That is what will set the stage for the health of this next open window. Now, keep in mind what's going on in the background. We're moving from a macro-driven environment, as you guys have been talking about it over the last few segments, a micro-driven environment with respect to earnings. And so I do think that's actually going to be quite a grounding mechanism for institutional investors to get back to company-specific earnings reports and more of a micro focus of the market versus this macro environment that we've been living in.
And obviously, I enjoy talking about IPOs. It's the most exciting part about my job, but certainly keeping an eye on the sell downs from some of the companies that have recently gone public as we get through earnings blackouts. Are we expecting to see a big rush with the floodgates opening?
Yeah, again, market resilience has been, I thought we retired the word unprecedented in 2021. Not at all. I would not be surprised to see our private equity clients access capital. They are by definition not hedge funds. They're not built to hold publicly traded positions. And so expect with this window opening, we'll see a flood of follow-on activity as well.
And just getting back to the IPOs, we only have about 30 seconds. Tech seems challenged. Do we see tech companies come public? Do we see software companies dipping their toe in the water from an IPO perspective, just given all of the headwinds that are going on?
I don't know that the window opens up for software again in the near term, though my crystal ball is in the shop. I do think a lot of that capital, though, will be happily deployed into some of the high-quality assets that are coming to market from other sectors, some of which have tech as an adjacency to what they do day to day.